Good morning, good morning, good morning. We'll give everybody a chance to wake up and stumble into here before we get going here. All right. How's everybody's morning going? Great now. That's what I like to hear. Nice. Nice. Okay. It's low. Okay. Let's turn that up then. Let's get this pumping. That should be a little bit better. Okay. Let's rock and roll is right. So, let's do a birthday backtesting session today. But before we begin, this is the last one for the Deplorables group, and just as a thank you for everything that we began creating and everything that transpired over there. Um, you know, both of our goals were to change lives, and the impact that we've had already is remarkable. So, thank you very much to everybody that's over there, um, and we'll do them some honor by doing some price study this morning and hopefully doing having some fun first and foremost. Okay, so let's jump in and let's do a birthday backtesting session for. Let's go with the wifey. We like 2023. Yeah, let's do 2023. So wifey's birthday is May in 2023. So we're going to go, and we're going to do it then. Let's go May 30th. Should we do the Friday or the Monday? Her birthday falls on the weekend. Or should we do June? No, let's do May 30th. And let's go 8 o'clock. Actually, that's not really going to work, is it? We don't want to see what goes on to the left. Let's get rid of all that stuff from before. And we'll go all the way. Where are we here? May 31st. May 30th. There we go. Let's start at 8 o'clock. 8 o'clock, May 30th. There we go. Okay. So today is going to be focused on some narrative, and we'll take some entries as well. But we'll get involved with some ideas on how to stay in. We'll look at some tips and tricks on how to stay in trades maybe a little bit longer, but we're going to be focused on objective-based price action reading today. Okay, and what I mean by that is, for example, if we're here and we're expecting price to go down, whereabouts are we expecting price to go down to, right? So if we fail here, price action theory would dictate, okay, we've got this area here. Are we going to bounce off of it? Or if we touch down to it, we're actually expecting to go through it right now and tap back into this. So it's using price action and our understanding of price to determine what we expect to happen next. For example, this area here has already been tapped into. We've created a bit of a run. So should we continue upwards and break above this high, then we're expecting to tap back into this zone here that's now been created, and we're going on a rocket ship, likely above that high pretty quick, right? So let's get into this a little bit. We'll kind of zoom through, and we'll get to 8:30, and then we'll start looking for some entries. Right now, let's just get a little bit of a handle on what's going on. Clearly in an uptrend, a little bit of a base here. Lethargic pullback, which means that we're expecting higher prices right now. This will be the area. Alternatively, we might expect a reaction out of here, so let's mark that out too. Right, and then once we get to about 8:30 or so, we'll look at getting you guys involved too, okay, and see what you guys' thoughts are on how to go. Does that sound good? Are we fired up? Cool. Cool. So let's get going. Okay, strong movement. We're now, please close the chat window. You guys are seeing this? What does it look like? Awesome. Okay, so we're expecting to trade back down into this area here. Let's see what we got. Okay. That's nice. So we've got our area of interest here. We've got our midpoint there. We're now looking to see if we get a reaction out of it. Cool. So we've got a shaved candle here. Trading above it is your buy stop entry. Looking for this high. We've now decided that we've now flipped here, tapping back in. Should we continue to trade higher, we're going above these highs and probably immediately above that one. There you go. There you go. And pretty quick. right? Why? Because we've already mitigated this area here, right? We tapped into it once. We've gotten a reaction out of this, right? So we have nothing left here to deal with. We've already mitigated it. So tapping back down, if order flow continues bullish, we get wrecked. We get wrecked, right? So what we're expecting here is that retracement after our narrative has told us that we're ready to go. Okay. So let's speed this up a little bit. We'll talk about maybe some cheat code entries here, right? Which we mean by having a bear bar and a strong trend, right? You're looking for higher prices off the close of it, right? So these are kind of low risk entries where you can take the close of that bear bar in a strong trend and your stop is a couple ticks below the, let's get that there, right? So you got your low, right? So in this case, it would be something like this and you're just looking for your 10 points. It's something that I do in strong trends when I'm not expecting climactic action, right? So we get something similar here. People bought the close of this candle, very weak bear bar, and then a rocket ship, right? And then people bought the close of that next one as well, rocket ship. Continue on, see what we get. Cool. Some valid high action coming in. See if you get a tap back in there. You would be expecting either an order flow flip, something like this, where you get a valid low and then movement. So now we're expecting much lower prices, probably back down into this range at a minimum. Everybody with me so far? Awesome. Cool. Okay, back down to our range. Awesome. Whereabouts are we expecting to trade back into? Right? What was the area that had some consolidation for us to leave? We're looking at this here. We might sweep into it. We might not. Right? We're looking for ideally something of inducement here, which would then sweep into it, and a strong reaction there would give us a sweep. Sure, we could talk about the shave candle for sure. We could talk more about that. Okay, so nice little tap into it. What are you guys thinking? Do we want it a little bit lower? What's our objective right now? Is it the midpoint of this? Right? We've got a nice area of consolidation right close to the midpoint of the zone. So we're flying into this, right? We didn't get our inducement in here. We want to see some sort of buying action that comes in for us to even consider a long out of it. Otherwise, this is a higher time frame. We don't know what happened to the left. It might have just taken a major high. And now we have a shift that's come in here. So we don't want to be just randomly buying because it's a nice area, regardless of it being an A level setup where we get consolidation inside of consolidation. Okay, there's some buying. Cool. We're looking at the high of this candle, definitely being an objective. We've got some more above here, right? So when we're looking at these shaved candles, you're looking at them as an area of liquidity of an imbalance of sorts, right? But what I'm looking to have you guys look at is, if you're long here, we need to see continued buying here, because this is now a swing, right? This is a 1 minute swing here. So in reality, we've got this level here at 550. We've got confluence of a shaved candle for liquidity here. So we have multiple reasons to go higher. We also have a key area for us to bounce off of. That's important. Why? Because if we're long from here and we see a reaction, that's when you know that you don't want to necessarily take unnecessary drawdown to come back in. Right? So your expectations of price, if you're long, say you're long, we get long at, I don't know, 29.25, 29.30, wherever price gives us an opportunity in here, and we take our 10 to 20 points, we're not holding for the moon unless we see something specific. So in your guys' back testing on your own, you want to make sure that you have a reason to get out of a trade. Similarly, that we have a reason to get into one, right? And we focus primarily on the ability to get into trades, but we don't do a lot of study on how to stay in them or when we're wrong. Cool. Right? Nice little spike in. Okay. Did we sweep this? Oop. 523. 523, exact low. Cool. See if we get it. Oop. What do you guys think? Little tap. Little tap. What would you not want to see on your lower time frame to see this? If you were looking long, which we are, by the way. You wouldn't want to see a flip of sorts occur, right? So trading above, trading back in, go. Or some sort of failure here to make a new low and trading above this high. Right? We want to see this imbalance tap in and put in a new low. And if that low sweeps, now we're gone. Right? This is SNDR. It's not a swing by any means. Right? This is our protected low. Equal lows long, okay? If we do go long and we get a reaction out of here, now we've got a lot of liquidity underneath here. Consider that everybody that's bought in here all the way up, they haven't been taken out yet, which means there's a lot of liquidity underneath both these lows, which typically means that we will revisit that later on. Okay, that's a nice push. Our imbalance is not respected. That's key information. Why? Because if you're looking to buy, or sorry, if you're short and you want to get out of your position, you need a valid buy signal, right? So if you're short and your ability to stay short, for example, in the short term, is predicated upon an imbalance. We want an imbalance tap and fail, and that doesn't work. That's key pieces of information that's going on here that tells us that higher prices are coming. Everybody understand that concept? Okay. Tapping into this area, cool. Should get a touch back down, likely to this fractal. There it is. Anybody along from in here? Where's your target? Your target is its objective up here. Minimum here. So when you're building accounts and you're long from, say, 27-ish here, right? Say we're long from this high, right? Like this looks beautiful in hindsight. We've got our high here of 37.75. That's where our first target is. Lo and behold, it's 10 points. And you're risking 10 points. Let's see if we get wrecked. Your stretch goal is actually holding to your objective. Oop. Okay, well, quick, fairly painless, right? But predicated upon information. Imbalance fail. I think we're good to hold to here, right? Especially the high of this candle at 49.25. But we take our 10 points over and over and over. There we go. There's your shaved candle touch. Inside of your zone. You guys see how they form as objectives? Especially when you have confluence of trading into somewhere. Pretty wild, huh? I'm not blindly shorting into here. But if I were, I'd actually be looking for these equal lows. Now, this is a 1 minute zone, so often I get questions of when I'm looking for flips versus when I'm looking for a sweep entry. Right? This is a violent move out of there. So anybody shorting from this area of interest, they're really happy. And where's their immediate target? Their immediate target's below here. Ideally into this imbalance. This high is 541, that low is 541. So we've actually mitigated this imbalance entirely of this push. So at a minimum, we're looking at this low. And then what happens when this imbalance isn't respected? Right? Why are we expecting this imbalance to not be respected? Because we have an objective here. If we fail here, we go here. Right? Everybody understand price action theory a little bit? Bang. Bang. A little bit more violent than I expected, but my goodness. Cool. Let's get rid of that. Now, the sweep video that's going to be coming out here in about an hour, hour and a half. The biggest thing about sweeping and the entry model that comes with it is you have to know when to stay out of trouble. Right? Otherwise, you're taking any liquidity purge and, you're long in here and you're hoping for 5 or 10 points, or you're long wherever or short wherever, right? Like hypothetically taking a sweep short here. Well, how do you know when to stay out of trouble? That's where your narrative comes in. No entry model or system works without knowing whether you're either in a range or trending, or what the objective is. So for example, we're in the midpoint of this area here. We've got our 50% move here. Sure, we've already traded into it, cool, but we have to understand what our objective is. So would we look for a sweep below these lows? Right? And if you were to even consider a long in here, you might get a reaction to here. You might get a reaction to here. But in reality, if you're going long, you would be expecting this high, and that high to all be taken. Because you have no other reason of going long. We've already traded into this area of interest. Right? So, in reality, the only reason to trade back into this area is if we create a valid zone out of it. And in order for us to create a valid zone out of it, we actually need a body closure underneath this low, which would then invalidate taking a sweep entry. Do you guys understand that sort of chess movement? Right? Everybody else is playing checkers. Is this the ICT method? No. No. We respect the power that imbalances have on the chart, but I trade market structure. We study price itself and how the market moves. Not necessarily liquidity, but what the market objectives are. What the market objectives are. Right? Liquidity and imbalances are powerful concepts for sure. But it's unfinished. Let's see what we get. Bang. Anybody long? That was a good time to stop and talk about that, isn't it? Right? So, you've got your protected low here. We still haven't taken it. In theory, we're still bullish. But now we've broken underneath this SNDR area. Therefore, I'm at minimum expecting a trading range. At worst, this is going to continue, and when we're looking lower to somewhere in here. Okay. If we're evaluating probability, this very well could trade back up into here. It's not a trade I'm interested in taking. If we sweep and fail underneath this, then we can long with some conviction. But I'm not expecting that because this SNDR just got wrecked. Right? And we missed some points that came out of here. That's 8 points so far, probably trading back up into this fractal. There's your imbalance. Not respected. Back into that fractal. Back down. See what we get. If we get anything underneath here. Dun, 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 dun. Right? So, very choppy. 9:02. We got 28 minutes till open. Cool. So what just happened here? Let's get rid of some of this nonsense. Right? So we've taken this. Cool. Well, actually, let's leave that on there because it's possible that this high gets swept. What you often see at New York Open, where is that, 9:30, is unless we just continue lower, you'll often see shorts get taken out above this high, and that becomes your higher time frame sweep, right? Because we have a high here for us to put in a higher time frame double top or whatnot, you typically want some sort of purge, and usually you see it trade back into this high. Right? So if we're formulating a theory on what we expect to happen, if we're going to go lower, we want to see certain things. We want to see early shorts taken out of their position, right? Manipulation. Okay, excuse me. Likewise, if we're going to go higher, we would actually want early longs taken out of their positions and then a strong movement. Now, that probably won't happen here based off the price action, but if we get a tap back down into here, then that would be a possibility. Okay, so sorry, going back to this area of interest, we just got our movement. That's a 1-to-1 entry here off of the midpoint. Those of you guys that are interested in that sort of thing, right? Typically, I would be looking for a refined zone rather than the midpoint itself. We tapped into it. We swept it. If we get a reaction out of this, then it takes you to that low, which it did, right? I'm looking for a little bit higher for shorting. So ideally, we get something that moves up here and sweeps this, and then a failure there would get me very interested to take this low. $9.10. This is dangerous. Right? So we're seeing some pretty good selling pressure coming in here. I think those are equal lows, aren't they? 523, 523, right? So we've got a lot going on at 523 here. We manipulated down. This is a wick on your higher time frame, right? So you're open, your candle started here, traded lower, and now we're moving higher. We want to see continuation if we're looking long, right? If we sweep below here and close, then we're probably looking at lower prices, right? And the way to get involved in that would be takes lower, taps back in, and then we're looking short, right? Alternatively, if we come down and we flip in here, right? If we do something like this, then that would take us higher to this high. So we'll follow manipulation, what price chooses to do here. Cool. Okay. Anybody long? We just swept this protected low. But this is a violent move down. Good. Too close to open. Good. 925 candle, okay. Oof. So let's get rid of this now. How good is this? Wait for 930. Okay. I think we can all agree somebody's going to get wrecked here. Right? That sweep generated a movement right into here. And all was met with was selling pressure. Right? So we've got a nice area of interest here. That right now is our objective. Why? Because we've just attempted to rally and our expectation of price is lower. Might revisit here again. We'll see. But right now our expectation is lower. Bang. And okay, failure. Might tap back up into here. We'll see. Still looking for lower prices though. Okay, is that our 930 candle? There's the 930 candle. Nice little sweep into there. Out of this fractal here, cool. Not responsible for anything, mind you, but a fractal nonetheless. We still have an objective down here. So we can sit on our hands and wait. I'm still looking either short in here, ideally up here, or long underneath. Right now we're charging, assuming we fail here, tapping back into this range at 23, which has now been defended. If we get a sweep of this and failure, that's going to be an unwind down to this fractal here. Okay, well, yikes. Swept this SNDR. Sure, nobody's wanting to go long, but you're looking for some sort of failure in here, which would then take you up. Whereabouts? You're looking for your little tap from here in to this consolidation, if it's going to do it. Okay. A lot of people bought the close of this. So if you're going 10 points, we just had a major failure. You got an imbalance here. You have a minimum target of trading back into that range. Bang. Right? 10 points. Very quick. Very, very quick. That doesn't mean that we're running up here for our idea. Right? Doesn't even mean that we're taking any of this. But what I like is that failed. That failed. That failed. That failed. That failed. We have many reasons to go up. There's your sweep. Failure here takes us where? Put it in the chat. Where are we going next? Where should we go next? What's our expectation right now? Lower. Right? Violent movement here. How much indecision do you think is going on here? When you're evaluating indecision and you're looking at failure in here, right? That doesn't necessarily mean we're going below here. That's weak now. But you're evaluating the strength of the movement that came out of it too. Right? So if you're thinking and you're looking short here, how likely are people to take profits here, given the strength of the move that came out of it? Right? And if you're wondering that question, look at what just happened. With the understanding that markets have inertia, how likely were longs to take profits here? Well, look at the chart. Pretty likely, weren't they? Why? Because of the violent movement that came into here. That's why ranges form and occur until the market's ready to expand. Because there's uncertainty. Right? So follow the last manipulation. Let's see. I'm not interested in shorting this, but I'm expecting it to come back down to here. Okay, cool. That doesn't necessarily mean we're going long, right? We took this shaved candle, this bullish one. Okay. Well defended, expected. No respecting of this imbalance. What does that tell us? Excuse me. Right? Probably going above this high. We just made another valid low in this internal movement. There we go. Right? Now, ideally, what we want to have formed is you have SNDR here. Cool. We'd want to see some sort of tap back into it to go higher with the expectation of then going lower. So it's if-then scenarios. It's if-then scenarios, right? We're not looking long necessarily to take this high. If price continues to deliver in this fashion, then we can hold for higher targets. But we're looking to the left to determine what exactly our narrative is. How long into this trend are we? Right? We just tapped into here. So there's a very strong possibility that we continue higher. Right? And if we're going to continue higher, then we would want to see some respect of the areas that are breaking out of our structure. Beautiful. Ooh, that's a tough close though. Right? So those of you guys that love contrarian trading, you're looking at your objectives. I'm not suggesting shorting in here to trade back down to here. But at the very least, I'm advocating that you've got specific targets that you want the market to hit. Right? You've got a manipulation leg here that just got tapped into. What happens when we trade up to structural areas? Right? We typically trade away from them. If we respect this area here, now we can look at higher prices coming in. That's the benefit of SNDR. Okay. Cool. All right, we just swept this. Anybody looking long, or are we sitting on our hands and waiting for a little bit more information? Cool. What would you want to see to enter a short position? Would you even consider it? Mm-hmm. Okay. Very good. One person's paying attention. What happened here? Right? So it's possible that we get a reaction out of here to take us back up to here. But we're looking at this piece of information that we would expect a nice reaction out of if there was unfinished business higher with the amount of volatility that we got going on here. So we're trading back into this range. Cool. We just swept this area. Cool. I think at the very least right now, we're looking at whether we get a flip out of this or a sweep here, and then we're continuing lower. We'll see what the next candle gives us. Okay. Traded right back down to where? I don't know where my thing went, but we've got this area here. Get rid of this. It's done its job. Right? Right back up to here. I don't think it took it. It did by one tick. One tick. One tick. Right? So failure in here, nice reaction. We're looking at this low. There it goes. Okay. Oop. So, nice sweep and reaction here. If we're looking at a sweep entry, let's say hypothetically we do this, and we're taking 8 points. Right? Let's go. Let's even go 10 points. Say we entered on the way back up there. You're expecting failure here means that we have unfinished business higher. So we're actually looking at the high of that candle there. And this is where you guys catch those 1, 2, 3, 4, 5, 10 to 15 point trades. And you're in and out of the market like water. Right? So right now we're actually up. We actually have hit our 10-point target, but we're looking for this. Right? And by the way, where's our stop right now? If we're in, we don't want to see it come back down into here now. We want this propulsion to finish its business up here and determine if we're, going to get higher prices here or if we're going to continue lower. And if it goes 30 points on us or 50 points on us or whatever, then fine. We'll look for the next trade. But our edge is in these quick movements. Let's see what we get. Right? Now, the psychology series that's coming out this weekend talks about things that aren't often talked about in the market, where we're long, we're up 12 points. Our target is 15 points. How do we stay in that trade? Right? When every fiber of your being is saying, we don't want it to fail here, or we're gone, or just take profits, right? I'm sure you can all relate to that feeling where we're right close to our target and it kind of moves away slightly. Do we hold? Do we move our stop to break even? What exactly do we do here? Right? The rational thing to do when you're up in profit is to close the position. Right? That makes us feel safe because there's conflict. Whereas when we're in a losing position, in order to avoid that pain, what do? We let it run. Don't we? Let's see some eyes in the chat. How often has that happened? Right? Where we're long in here, but we'll just let it go because we don't want to deal with that loss. Right? So what it comes down to is you have to be fully capable and aware of the caveats of your system, when you're right, when you're staying right. And what you're doing is you're relinquishing control of this position because you've back tested and you've studied 100, 1,000 times what your edge is, what the probability of it taking that candle is. And you might have an 80-85% win rate taking it. You might already be out with your 10 points, or at least, at the very least, you've moved your stop to, I don't know, somewhere here. And if that's your systematic decision, then you can be at peace with it because you've already done it. You've already done it enough times backtesting, and you're looking for your next trade, and that's fine. What we want to avoid is the emotional closing of the position rather than our system dictating to us what our actions are. Why? Because if we're able to do that systematically, now we're doing things consistently, and we're getting consistent results as a response to that, which is what we're all here for. We're all here not to make one really good green day. We're all here to make that a reality for the majority of days in our life. Okay, just some food for thought. Bang. Cool. Why this? Why not up here? This was the structural candle that put us in. We've already dealt with this one. We got failure here, it takes us above that one. Right? Now failure here tells us something else. Right? Back down to our area. Cool. We've already taken our profits. Boom. Now what's our expectation? Are we expecting a range? Are we expecting expansion lower? What are you guys thinking? Those of you guys that want me to look to the left. What do we got going on down here? We got some pretty... I don't know where my thing is. I don't know where it went. Well, we've got some key areas of interest down here, looks like. Bang. Right? We've got this consolidation lower that we've actually just left and haven't come back to, so I'm going to mark that out as well. That's an awful magnet tool. Drawing. I'm sure it's not the magnet tool's fault. Right? So this area looks like we've already just tapped into it. That would have been an area of interest, right? Just for posterity. We're marking this out here, right? Weird. Almost like the markets are random. Oh, there it is. It was hidden from Discord notifications. Thank you, Ty. So why am I drawing out things lower instead of looking at this high anymore? Is it because of this bear bar? No, it's not. Why is it? We knew from here that we wanted this respected in order to continue higher. Right? Yes, broke SNDR. Right? We've now got our higher time frame double top. It's 951 here. We just got a really rough bear bar. Right? So are we looking higher for this shaved candle? No, we're not. We're expecting expansion. So when to not take a sweep, we just talked about having a higher time frame objective met, which leads us to looking for lower prices. So if it comes below here, stay out of trouble. Right? Cool. Okay. What are you guys thinking? What are we thinking? It's a valid swing area that came in. We're tapping into the consolidation within it that yielded a very strong movement up. What do you guys want to see? Back to imbalance. Cool. Would that be a valid target, guys? Close above this candle. Okay. Okay. If we're going to continue lower into here, how would we deliver that? If it's going to do it quickly, then yes, we would do something like this. Right? And then see what we get. If we're going to have a stronger push down, this would do something like this. Back to into where? The SNDR. That sent us lower. Right? And then we would have a very strong movement down, in which case we wouldn't be looking at buying. Right? Let's see what we get on the next candle. We can all agree, however, that looking to the left gives us opportunities to have potential speed bumps. Nice. Okay. Ooh. Okay. Violent reaction, but violent buying. What are you guys thinking? Did that imbalance fail? Do we need more information? Are we shorting with a stop above it? Long? Cool. Question would be long from where? Right? You've got this here. So those of you guys that prefer your lower time frames, you're actually looking long from here, and we'll see if we get our 10 points. So there's your 10 points. Right? We haven't got tapped back into yet, so we're technically long from here. I'm going to put the entry here. And there's your stop. More info, okay. More info, cool. Sitting on hands, okay. There's your 10 points. Strong movement out of here. Right? I wouldn't be looking short for sure. But I've taken my base hit. Long of the sweep of a low. Okay. What you're looking for, if you're looking for a sweep entry here, is you're looking at this imbalance tab then has to fail, and we're looking higher. You get a body closure in here, no bueno. So let's see what we got. We still sitting on hands, or are we thinking short? Or are we thinking long? Nice little grind. Or do we want lower? Cool. Cool. Be honest with yourselves as well. This looks, well, it doesn't look. It's emotionless while we're back testing, but we see these candles that are 18, 20 points long, right? Their goal is to provide emotional trading. Last manipulation says lower. Cool. If you're short, we're not adding in here. Right? You're not adding in there. If we're wrong and you're short, then you're looking at a minimum of 460. Very likely that it trades above this candle. Right? That's where body closures are important. Oof. Traded back into the range, dumped lower, right into our area of interest. Pretty cool that markets are so random that we can draw these zones out. Right? All hindsight 2020. I swear if we didn't do this in real time, people would be like, well, what's the point of this? Right? Ooh. 30, 25. Oh, 400, 400. Very cute. Here's where you might get excited about a sweep pattern. We're looking for a little bit lower. Wouldn't that be lovely? Right? Let's see if we get it. Right? I would be looking long if we swept below here with a stop. Ideally, we sweep below that low and then trade higher. Minimum target is here. Right? We've got some nice volatility in here, so as long as we're in at a good spot, we should be able to make a decent amount of money on our next trade. Oof. Imbalance tap. Cool. Oof. Objective met. Would have left me behind if I'm honest. Like the tap, don't like the equal bottoms. Very difficult. Very difficult for me. And it left without us. Cool. Okay. So now what are we looking for? If it takes forever, probably looking to retest this origin area and or that sweep still. Right? But there will be opportunities, both long and short, so we can get frustrated here. Cool. You know, we just missed a 30-point move, but we don't allow the rest of our day to dictate based off of that frustration. Right? So our perception of it is, yeah, that sucks. This is exactly what I wanted, and now it's left without me. But now, instead of having to get involved, we get to look for a short opportunity to take us back down into there. So thank you, market, for providing that for us now, right? Because there's unfinished business here. Unfinished business, my goodness. Can't speak, right? Alternatively, we now have an area to look long from. So we turn this into a positive mindset and framing rather than dealing with the frustration of missing a trade. Do you guys understand the psychology of that? Right? We don't have to be involved, but we get to reframe our perception. Look at this. Anybody looking short above here? Right? If you're short, where are you targeting? Are you even looking short? Right? Just because we can read price and go, okay, if it fails here, it's coming back down to SNDR, and then we continue higher for this fractal, and then we, doesn't mean we need to be involved in all of that. We have to take probability into account. It might be a lot more feasible to have our one trade of the day be a long on some sort of a sweep or a tap into here. Right? We have our area of interest. Let's take these off now. Right? Right? So mark it up. We've got our area here. We don't need to catch this short into here. But our system is we enjoy taking longs out of here with the understanding of what we expect price to do. Relinquish control of being involved in everything you see. Your win rate will increase, your bottom line will increase, and your life will increase. Anybody long? Right? I usually will look at taps when they trade back up to the open of the candle that I'm targeting. And now my target's here. Okay? So this would be a trade that I would take. Let's go what the open of that candle is. 48.75. Oops, sorry. Close of that candle. 37.50. 37.50. We're up 3 ticks. Quick, close it so I have a winner. Quick. Quick. Cute. Now we've got some price action we like. We don't like that it failed this area of interest. Right? Traded back down. Cool. Or maybe it traded up first and closed there. My guess is that the closure here dictated a movement back down into this, and then it rocketed higher. But we're looking at this candle with the expectation that price goes higher. Would I take the S&D long if the 1 minute didn't close above the protected high to the left before it broke down? Would I take the SNDR if it didn't close here? Well, I mean, it didn't close above here. Right? What I'm looking at is we have a strong price movement here. This actually didn't break above it on the 1 minute. This was an area of interest that I saw based off of it trading back into this zone. Right? This is actually a stronger SNDR, I think. This is just somewhere that I would look for a reaction for continuation. Can you go over the top you just talked about? You want the top and bull close above bear close. So how I look at it is we have a strong price movement down on our bearish candle, right? A little bit of a movement back up to close here. We then trade lower, trade back through it above this high. So this is a smaller time frame trap, right? Where we'd actually expect to tap back in and then higher prices to where? Our target. That's the methodology behind getting involved in this open here. But it's got to trade into somewhere that we're interested in. Right? This isn't an A+ setup by any means. This is just reading price action and what I see. Right? And as a result, look at that. It met its lower time frame objective, and now here we go. Right, we'll see if we get, we've got a nice sweep in here. Right, traded immediately above that candle. Can understand people that are interested here. What I don't like was the reaction that we got out of this area. Right, I would have wanted to see some strong action, ideally a close above here, and then a retest into here would then yield something. Right? I can understand people wanting to take a sweep of this for that high, but I'm not expecting much higher prices right now. Unless we get something further. Okay. To answer somebody's question earlier, this was your powerful SNDR. Why? Because this was a strong downtrend in the lower time frame, which then broke above. That was the one that broke that high. Tapping into it. If we trade above this candle, then we trade above all of this. Everybody understand that expectation? Right? We're respecting this area lower. If we get price movement higher than these, everybody shorting here is on the wrong side. And we likely trade back up either into this range or this SNDR or both. Okay. And by the way, this is where you're not looking to short the tap back into there. Okay. Keep. Oop. Cheat code entry, possibly. Very, very poor bearish bar. Expectation. Up we go. And up we go. Ooh, did that do it? I don't think that's an SNDR, is it? I guess that kind of took us below there. So it's important, but I'd be looking for a trade back into this range here. Let's see if we get it. Right? ICT bros will see the market trading, rebalancing, trading to liquidity, right? We see the market moving from objective to objective to objective. And we see what we get. Right? Where would be an area of interest? We'd expect to see a bit of a speed bump out of this, minimum, if we do go lower from here. And we're thinking lower, by the way, only if we fail in here. There's a very strong possibility of us trading back up to here. Right? But if we're looking for areas to get long, we're not going long up in here. That doesn't necessarily mean we're going short, but we're definitely not buying up here at 467 or the close of this. Right? So if we're looking long, we're looking, okay, we've got an area here. We've got this area, which is responsible for something here. Right? There's a very strong possibility of a double tap in our SNDR zone here. But don't forget, we also have this down here. Where do you think everybody's target for shorting is? 14,400 even is the low of day so far. That's a little wild, isn't it? Birthday trading for wifey. There's your reaction tap. Might get something like this out of here. Not interested in longing this high though. I would look for something a little bit lower. And if that fails here, I'd be stalking short. Okay. Beautiful. What are you guys thinking? You're thinking this touch trades up to here or higher into here? You guys thinking a little bit lower? You guys looking at the liquidity? Higher to where? Higher to here? Let's get rid of this now. I think that the SNDR will hold. Okay. What about trading below this candle or this one? Where's our liquidity right now? Right? In fairness, we just liquidated anything from here because a lot of people were long in this consolidation. Right? But obviously that wasn't a sweep because we didn't close up there. So there wasn't any reason for the market to take that and then trade back in. Trades below, then it goes to the low. Okay. So if we're evaluating the strength of this push down, our liquidity is below here right now, with quite a bit below here. So the question then is how we're going to deliver it. We've got two options. We either bounce off of here, which takes us to here, and then we go lower. This provides only a small movement back into this consolidation here because we just ran right through everybody there that was buying from this erroneously. Right? The higher probability trade is looking for a sweep of this candle, which then takes you back up into here, ideally. Unless we put in some sort of a inducement here, in which case we run them out and then we go lower. Am I going too fast? Right? Either way, whichever those scenarios gives, whether we trade back into here or we trade from here to here, we're actually going below this low because that's where the liquidity is. And if we weren't going below here, we would have held in here. Does everybody understand that? Right? So the key takeaway from all of that is, where's the liquidity? And if you ask yourself 2 questions through the day, it's not how to get involved or anything. It's where's the market going and where's the liquidity? What are we doing and why? That's market structure and narrative. Market structure is the what. What are we doing? We're making higher highs, higher lows. Are we ranging? Where's our swings? Where's our areas of interest? And the narrative is why. Why are we going down? Right? Trading below here and failing means we go higher, above this. Right? Trading above here and failing means we go lower. Doesn't mean we take this low necessarily. That could be our narrative. But we know we have speed bumps along the way. And it's how we react to those speed bumps that gives us our adjustment to our narrative that we're having to deal with in real time. Okay? So, tapped into here, gave us a bit of a 1-to-1. Cool. We just swept this low. Cool. Traded immediately back into this imbalance above this high, as it should. Right? What's our response here? Where's our response that we are looking a little bit higher? It's not the respecting of the imbalance we wanted to see for short. Right? We just traded back into here. Cool. So if we're long, we're not long from here into an imbalance. That's how you get killed. Because essentially what you're doing is you're expecting this imbalance not to hold after we've just traded into something and failed. We just put in a valid high. Right? So you've got your first, your second, this is your third swing coming in. So we're scalping. Let's see what the next candle brings. Let's see in the chat. We got one person that's saying up. What do you guys all think? If you're long from here. And you don't want to see it come back down. Right? Because essentially what you're saying is that this imbalance should fail here. If this imbalance holds and it comes back down, it's taking this low. Up to bear bar open, okay. Right, so if we're long from here, and we're break even right now. That doesn't necessarily mean we're looking short. Range a bit first, okay. Right, again, where's the liquidity? Now, the alternative to that narrative would be sweeping here, which would then take us higher. And if we get that failure here, we're going above this. Okay. Huzzah, huzzah. Right? You guys still holding? Lower time frame objective. Let's see what we get with this trend line. Trend line liquidity is below us. That's right. On my experience, still holding. Okay. We taking the sweep? When you're in low enough, and you take your 10 points, or you hold to an objective, your objective may very well be this candle. Right? If you're in on this sweep, your objective is this candle, because we have an imbalance there. Right? This imbalance just provided a new low. Cool. Right? No one less lower. Fair value gap. We don't trade using imbalances here, but we respect the power that they have on the chart. Usually when I'm looking at imbalance trades or imbalance strength, I want to see this candle, tap into it, and then respect it. The majority of my trades have a trade time of 1 minute, 1 minute 9 seconds, I think it is. And the reason is because I'm in and I have a very clear expectation of what I want it to do, and then I'm out. There goes our liquidity here. Cool. Trading, we just swept this. Awesome. Into our area of interest. These lows are certainly a target. Right? Let's see if we can take them. Strong push away. Probably from the midpoint of this. Yep. We just mitigated an imbalance here. Not good for bears. What do we want to see? Those of you that have watched the candlestick video, you have two different options here. You want to see a bearish response from this strong buying pressure. In other words, you want the open of this candle to trade higher, right? How do we have bear bars form? We trade above, we trade through, and then we close here. And that creates your bear bar. Right? See? Bear bar. Clearly. Right? We do not want to see, if we're going higher, we don't want to see a very poor bear bar come in. Or a weak buying bar. We want the bearish response to be a body closure in here. Right? Like, get off of my lawn. We're going here. Cool. Bearish response. Buying. That looks familiar, doesn't it? That doesn't necessarily mean we want to go long off of this. But if we're short and we're holding a swing to here, you've got to know when you're wrong. You got to know when you're wrong. And I would not want to see it trade above this now. I would not want to see it trade above that now. Drama's long. Okay. Where's your stop? Below here? Okay. So long here, cool. Where's your target? 12-point stop, 408.75. Okay. $12.25. Cool. And your target is probably that imbalance there. What is that? 1.4? Just 10 points? Just 10 points, eh? Good lad. Right? Let's go 1-to-1. I think that's valid for analysis. Right? We've already mitigated this fractal here. We traded into it, traded away from it. If we trade back up through it, sorry, if we trade back up to it, we would trade back up through it. Whoop. Bears nervous? They should be. You might get a tap back in and go. This is a strong bullish response so far. This is where everybody's looking at this going short to it, short to it, short to it, short to it, short to it. Right? Trade what we see. Trade what we see. Doesn't that make us look silly? But we'll take it, won't we? If you're making 70 points off of 5 or 6 trades of these on a daily basis, it's easy to get caught up in the ego or greed of wanting to hold these to higher targets. A lot of you guys are focused on growing accounts. That pattern's looking like the one Stoic highlights in SBS. Yeah, I haven't actually looked at his video on SBS. I have great respect for Stoic as a trader and his analysis for sure. What you guys will find, especially those guys that have been around the futures market long enough, is that a lot of patterns or price action or whatnot, you'll find that the entries vary slightly, but the way of reading price is all very, very similar. Right? So, for example, people will see this being a 2-leg pullback that then trades above this bearish candle. Right? People will see this being a trade back into here and failing the key area of interest. People will see this being a double bottom on a higher time frame. I don't know him as a person. I don't know him as a person, but anybody that provides stuff to the community for free, whether they have a paying service or not, if they're genuinely trying to make the community better, I have respect for them. That takes courage, especially putting out content like that. Right? I haven't spoken with him personally, of course, but the fact of the matter is that he's put out a model that I've seen people having success with, and that to me is fantastic. You know, anybody who's making other people's lives better to me is doing something for the community, and that's great. Right? Yeah, some people are noting this candle here. Right? Notice how we have an actual protected high on our internal structure. Right? People will see this as a flip as well, as Luke's saying in there. Whoop! Nervous? We nervous? Let's get rid of that. Appreciate that, man. Not nervous, already out. Yep. Disrespected this imbalance. We're looking at the low of this candle. Might trade back up and back down into this. We'll see. Let's get rid of that. Get rid of this. Sideways. Liquidity is underneath here. If we don't touch that, then we might leave it for later, or we might just rocket ship, right? So basically we have a lower time frame trading range. Very violent. Let's leave that. We've already dealt with this. Get rid of that nonsense. We dealt with that. Get rid of that nonsense. We dealt with this. Get rid of that nonsense. Right? We'll leave that on there. Whoop. Ooh, what are we thinking, lads? What are we thinking? We're in the middle of indecision. Stay away from here. Right? Stay away from here. This is a minor range. You're looking at the key candles here, right? So low, low, low. Cool. Failing here. We want to see failure there, or else we don't get involved. Right? Likewise, we want to see failure up here. It'll likely put in a range, which we know has its own structure. It trades the extremes. What are we thinking? You're formulating ideas, right? We're staying out of this. We're not going long here expecting this. Equivalently, we're not going short here expecting this. Intention was shown. Look for rejection and continuation higher. Okay. Okay. You have your last structural low here, which is now formed here. We haven't broken this protected high. Structurally, we're still bearish internally. But we're respecting key areas. So as it stands right now, we're actually short, ideally, from here to target this. The caveat to that is that we need to form a valid high. We need to form a valid high. Right? Now, the problem with that, usually we use that, for example, this was our bear bar. We formed a valid low here. We went higher. This was trending up to an objective. We're now trending lower. We've now failed here. Structurally, we're bearish, but this is range bound. This is different structure in here than what we saw from this. Right? That's a very important concept, because looking at this now, we might get a body closure below here, which is a little bit confusing and tricky, because essentially what we need some strong action lower. And the reason for that is because we're still bearish structurally, but range bound, we're looking to trade the extreme on failure. So typically I would want some sort of a sweep here into this area of interest to go higher. But that would still be just a scalp. Let's see what we get here. Okay. Took the liquidity of that. Nice little close. Still not looking short. We might trade lower though. Oop. Okay. Swept this. Cool. We've got some liquidity building above this now. Right? Let's see what we get. Oop. Anybody looking long? L-Dub was saying look for rejection continuation higher. This is the area you'd be looking for it in. Excuse me. All right. Oop. We thinking above here? You guys getting anything out of this? Or are we just kind of spitballing? This is very tricky range-bound action. And you can tell it's a range because there's indecision, which means that we look for extremes. Whoop. Technically, we got our valid low, or high, sorry. Right? When in doubt, sit on your hands. We're not going short here. And I don't care if that takes us low right now. Because we need to be able to consistently trade. So if I'm not short from an area up here, I'm not interested. When everything in your mind is telling you it's going down. That's very hard. It takes courage to be able to do that. Right? Oop. So what would cause us to get long? What would equivalently cause us to get short? Right? Shorting is easy. Short is easy. We want it to trade back into the prior range. That's our objective. Unless we see some major movement, which tells us we're actually going much lower than this. Because what that would say was that this was actually the movement that was, they tried very hard to trade back up into here, but the selling pressure was so strong that it couldn't even achieve that objective. Right? We've mitigated this area. So if we trade into here, we go below those lows. In which case we're looking for maybe a sweep. Something strong in there. Right? So we have a high, a high, high, a high, a high. Right? It would be reasonable for us to suggest that failure could be a change in order flow. Right? And what you're looking for is you're looking for something predominant on the downtrend, right? So a high that actually is responsible for something strong. So for example, we wouldn't look at it in here because we're in the middle of the range, right? We need a clear downtrend, which then changes to go higher. Alternatively, you guys that are looking at this area of interest that we're defending, we've just swept there, right? So we might have had one trade in here that took us up. Maybe that made 10 points. But if we're going to go higher, we're essentially looking for a pretty decent change in order flow, and or you're looking for a candlestick pattern, right? A candlestick pattern would look something similar to, we're trading down, our bearish candle. Didn't we find one up in here? We're looking for a weak candle. Wasn't it in here we did? Right? So consider this candle here, strong trend and awful response. One of the scalp entries that I take is where, I don't know if we can find one here. Maybe there's one over here. Yeah, that's perfect. Right? So consider what happened on these two candles. Bearish pressure, bullish response by the close. Right? We had the bears try to sell off, and they were overpowered. Immediately overpowered. That's higher time frame participants going, thank you. We'll take that selling pressure. We want as many possible long contracts as we can. That would be something, if we're going long, that I'd be looking for. I don't like this lethargic movement down. Right? That means that if we're looking long, we're at best we're early. At worst, we're on the wrong side. So when you see this, that's when you start looking for a change in order flow. And you want something where the bearish response came in. We're not looking for this. We're looking for a bearish response. So this candle here that traded lower and failed, we're now looking for a change in order flow that goes above it. Okay. Or we're looking for some sort of candlestick, or we're looking for a sweep down here, in which case we should see a strong bear bar that comes in, right? What I don't like on the bearish side, why I'm looking at long movement, is because we have this candle here that was just destroyed. Every bearish candle seems to be sweeping. The pressure comes from the bullish side. Okay. Very weak bearish response to that sweep. Definitely getting interested in going long. Cool. Beautiful. Right? So now where's our liquidity? Our liquidity is here. Our lower time frame liquidity is below this candle. We've got this area of interest here. I would be looking long if we get a response out of this. Expecting expansion higher. Somebody mentioned a flat top candle. Yes, absolutely. Okay. Ooh. Ooh, baby. You guys smell something? I'm smelling something. My goodness. Right? So let's get rid of, well, we've got that high. We've got this high. We've got some liquidity here that hasn't been touched. We've got this high here that hasn't been touched. That was nice. I don't like the closure up here. And we still haven't traded into this range. right? So let's extend these out. This could lethargically move if we're going to continue higher, in which case we'd be looking for a short for these lows. But we're looking at price that's telling us we want to go higher, right? So midpoint, 10-point stop, right? We've got small target of that candle, which is 7 3/4, right? But what I'm looking at is this high is not part of structure. This high didn't generate anything. This is our last protected high. So at a minimum, this high here at 49.75 should get wrecked because it generated nothing. We still have a target up here, but this is the low-hanging fruit that we like to take our base hits for. The key of this is that our narrative has now flipped where we're seeing this. Now, this candle is telling us we're ready to expand, right? Very weak, strong bull bar, swept the liquidity below it, closed here. Strong buying pressure. We haven't tried rallying since this, where we failed. That's very important. You're late to the BBQ. Yeah, no kidding. Down here would have been beautiful. Down here would have been beautiful. I just hate getting shook out on entries. Okay. Well, we like seeing that. Where's our stop now? Right? We don't want to see this imbalance mitigated. So our stop now comes to here. Boom. Making us look silly. Why are we not holding the target? Right? Target here. Low hanging fruit. My goodness. What would be reasonable? Trading back into the range? Possibly. Possibly. Right? We have a nice little fractal area here that you guys are looking at. Right? But why would we consider shorting up here without a sweep? Essentially, you're trying to pick up pennies in front of a steamroller. We're looking to get wrecked. Right? That trade would have worked out for, what, 10 points maybe? Might have got your 10 points in there if you were right on it. How's that for a bearish response? Say we're out. We are out. And we see this. What do you think the next candle should do after seeing that? Not good. Trades down, immediately back up. There's another 10 points. Right? If this candle was something like this, you might have a different story. Right? These are called profit-taking candles. They're not people entering positions. They're people that are taking long profits. That's very, very different. You want candles that initiate something from areas of interest. All this is doing is people are going, okay, there's a key area of interest here. I want to take a little bit off. That's not telling us we want this. Right? We can make money here higher probability and the better short comes out of this. Right? We just swept this candle lower, tapping back into here. We're looking long from here to continue higher. Up we go. We've got our high here at 73. We've got this low of 76. Drag that over. Whoop. Dangerous. Dangerous. What are you guys thinking? Mm-hmm. One more candle, okay. You guys tell me, where's the liquidity right now? If we're going lower, where are we going to? If we're going to fail here, what do we want to see? Just tapping back to go higher. Are we going long from here? You better not. Just 10 points. Sweet, okay. What are we expecting to form here if we trade in, if we go sideways here? Right? We consolidate here. Is that what we want to see for a long position for a long-term move? Right? What happened in here? Bang, bang. Right? I haven't watched the video. Is this what you guys consider an SBS? Sweep, isn't it sweeping both sides before the move happens? Right? Essentially what we're talking about is something like this, right? We would need to sweep this. The answer is we would create an SNDR here, which would form as a final flag, which would take you up. And the power of this area is that if we do generate that movement and we don't see a failure here, we might see a rejection. But if we consolidate here, say in this area, and we trade up and we trade through it, we're looking to go below here. Right? Because that's essentially them exchanging their longs for shorts here. They then run the liquidity. And if a failure occurs and we don't continue to accumulate a position in here, then it's look out. Ooh. That could be some failure. Could be some failure. Still sitting on my hands, obviously. What do we got going on in here? Ooh. Did that take it? 47, 47. Equal lows. Equal lows. Anybody long? Tap back in? Or are we thinking short? What's going on? Which one, lads? Which one, lads? Long now? Long now? Okay. Okay. Whoop. And we get 10 points there. Fair. Yeah. We take our little base hit. Sure. I probably wouldn't want to trade below here, but I would give it a little bit of space. Equal lows going long. Okay. Stop below the wick. Cool. Cool. Long, long, long. Nice. Nice. I'd probably have a heart attack if somebody said they wanted to short that candle. So thank you for keeping me alive, lads. Ooh. Ooh. What did that give us? 50? No, 52.75, sorry. 275. Here we are. And that gave us 3 points of drawdown. 3 points of drawdown. Oh, we're still not in. We're still not out yet. Probably a rocket ship. Yup. Took that high too. Took that high too. Lovely. Whoop. Nice little failure though. Probably a lot of people that entered a short position. Probably a lot of people that entered a short, but anybody long from in here, very likely that was their target as well. So you would expect a sharp reaction. Okay. Right back into this little fractal. Wouldn't be surprised if we traded back down into here. But I'm definitely sitting on my hands until I see some direction. Okay. Finally back into our range. Finally back into our range. Are we entertained? Are we entertained? Oof. Oop. Okay. Okay. We want to see something. Did we even tap into this? Oops. Nope. How are we doing here, by the way? 1, 2, 3, 4, 5, 6, 7, 8, 9 for 9, lads. 9 for 9, lads. Not too bad. Not too bad for a Monday. Staying out of this for sure. So much hindsight, no doubt. No doubt. Staying out of this soup. Right? So what are we determining here? We've got our area that broke above. So far we're failing. Yes, this video will stay up. This is a thank you to Deplorables, and this YouTube channel will stay as the property of Deplorables going forward. That's fine. You know, our gift to you guys. Thank you very much for everything. Right. So last failure here. Cool. Right. Which then provided a movement back up here. I don't think that took that candle High of 74.75, 74.50. One tick. One tick. Whoop. Bang. Bang, bang, bang. Not looking long. Not looking long. Why? We just traded into our objective, and we want to see if there's anything to even consider going long for. We've got these equal lows here still. Look at all this crap on this chart. Let's get rid of it. That one, that one, that one, that one, that one. Let's get rid of that. Get rid of... We had our tap back in. We already dealt with that. Got this. This. And... You know what? We'll leave that up. That's good. That's good. That's good. We still didn't take that liquidity, mind you, but we'll see. I would be expecting if we traded into here that we'd probably take these lows. That would be an expectation, right? As you guys can see as well, high, 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 high. We've got major reasons to go up, but we're not looking long up in here. Not looking long up in here. We might get a tap back into some consolidation and a movement, but we need something pretty conclusive. Okay, there's some follow through. Right back into that consolidation there. Cool. So, down, down, right? Down, down. Cool. Into here, which might provide a movement back up into the range. But if that's the case, you're essentially looking at sweeping into here. I don't think we took that low, which would have been something that I would be looking at. Right, so the failure to take this low actually makes me believe we're actually going to go lower. But I can understand trading back into the range if we get a reaction out of this area here. And there's our range tap. Cool. Might be looking for something a little bit higher, but it's sitting on my hands right now. Closure below that candle. Not good for bulls. They don't want to see it come back down into here. There it goes. Right? So candlestick expectations. If then this. If this, then this. Right? Oop. Again. This little movement here. Not a swing. Imbalance respecting. Put in a new low. Cool. And what do we get? Oop. Right? So high, 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 high. Oop. What are we thinking? Right? Maybe a tap back in and go. Did that sweep? That swept there for sure. We got a little area of interest here. Still looking for these lows. Still looking for these lows. We need a bearish response for sure. So our two options are strong movement down, back in. Very possibly that we just missed this. Very possibly we just missed this. Where are we at right now? 11:27. We'll go for another. We'll go till about lunch hour, and then we'll kind of play it through and see how you guys' narrative works out. One person long, cool. Okay, well, money just got paid. Good lad. Nice work. Right? Possible speed bump coming in. Nothing I'd be interested in shorting right now. Okay. Very violent movement and nothing coming in. Cool. Exactly what you want to see. Strong reaction out of it. Very poor bear bar close. So immediately targeting this high. Cool. Might trade back down into this fractal, given that we just swept and failed. We'll see. Definitely not going short. 53.50. Yep. Just tapped into it. Literally to the tick. Literally to the tick. Okay. A little bit deeper mitigation now. Cool. Whoop. She going higher. She going higher. What are you guys thinking? Think we take this? Conservative target here? Right? Sweeping below this and failing. Some strong buying coming in. Starting to lose people, I think. Too much. Whoop. 70.25, 70.50. Took it by a tick. Nice. Might trade back into here. We'll see. Nope. And does it take the high? Beautiful. Beautiful, beautiful. Weird. Finally, after 2 hours, finally tap back into that S&DR. Finally tap back into that S&DR. No imbalance until here. No imbalance till here. Time to short is right. Time to short is right. Where's your first target? Yeah, Mikey. I didn't pick Monday just for you, man. I promise. Imbalance, cool. What confluence do we have with the imbalance? Yep. Yep. SNDR, cool. So we have this fractal within our zone here, which also, well, we've got this larger area here. Yeah, right? The high that failed, put in the low that moved. Cool. Definitely an area of interest. Right? You've got your imbalance here. Confluence with that. Right? So we refine that down to being that area first and foremost. Shaved candle low. Yeah, that one for sure. Cool. You've got a little bit down here. What happens to everything down here, by the way? Should we flip in here? What happens to all that? Weak. Weak. Right? Now, we don't want to get caught up. I don't know about you guys, but on my road to profitability, I got caught up in wanting to short every failure to try and target that objective. Right? So what ends up happening is, you know, you're short, you make a little bit, but you take your runners off break even. And you're taking scalps the entire day for one objective that sometimes doesn't even end up getting met. But I think we can all agree that failure here brings us at least down to this. And we'll see what that brings. 2 to 1 at least. Yep, I agree with that. I agree with that. Right? So, shorting here with failure, if we take a 10-point stop, does that offer us room for 10 points minimum? Does it offer us room for 20 points? Yes. Right? Certainly an immediate 10. Certainly an immediate 10. Right? Bang. Immediately. Right? Now, we might be able to get some more out of this immediately, which is cool. Right? Trading back into here might offer us some movement back up where we can take another position. I am thinking short. We just tapped into this SNDR. We respected it. This right here, this zone, is my entire daily bias. The entire one. If we don't respect this, then I'm not looking short for the rest of the day. And I don't care if it gives me a movement up into here and a 30-point move. This area here, to me, is responsible for all of this. So I want to see that respected. Right? That's the main reason that we're looking at this. I wouldn't actually be shorting this bar. I'd be short on the failure of this. Like literally somewhere up in here. Off of its respecting. These are A+ areas that you expect to see reactions out of. And you can backtest and study that on your own. Cool. Tapping back in. There's our first area of interest. Lovely. If we get a sweep of it, that might take us above this candle. And swept. Cool. So we'll leave that. Right? So let's go sell this candle. Yeah, 2-point stop. Cool. But I'm not willing to let this run too much more. But I'd be looking at something like this, which ends up being, what, 9 points? Right? This is an example of objective-based movement, where if this, then target. Not 10 points, but objective. Objective to objective to objective. Right? Why are we targeting that candle? You could have just as easily targeted this one. But that's the candle that I enter on. Usually I target the one that brought it in. Right? First imbalance made a new low, but strong reaction out of this refined area. And maybe a little bit further. Maybe. We'll see. Ooh. Double top. Double top reaction. Right? Where are we going? Probably immediately below here. We'll see. Ooh, good reaction. Good reaction. Better response. Bang. Oh, wow. That's beautiful. Where's that going? Anybody have a guess? If you were long here, where's your target? Right there. Probably these highs. Right? Probably those highs. Equal highs are really nice. Well defended here, though. Well defended here, though. We'll see. Okay. Immediately. Failure here. Immediately above this. Be looking for those highs there. We'll see what we get. Oop. And still nothing? Still nothing? Oh dear. Right? You don't want to see this manipulation with a retest to it. At all. Right? Expectation. What's the expectation of a body closure in here? Bang. Right? So we might have been long in here, for sure. Right? Conservative target. Stretch target. We failed here. So not really looking for higher. If we do go higher, it's probably short-lived. Money probably got his 20 points. Oh, yeah, easily. Good lad. Right? Lower for sure. Probably violently. This is called a surprise bar. Bang. Bang, bang, bang. Liquidity below here. That might give us a tap back into the range. Nope. Immediately did it into this imbalance. Looks like we're respecting it. Looking at this low, probably this low here. And quick. Lovely. Back up into it. Some violent movement here. You need a response from the bears. Oh, well, that would have done. Closure there. This is still dangerous. That high is 55. That closure is 55.25. Very tricky. Very tricky. What are you guys thinking? Up or down? Okay. Okay. Conflicted? Conflicted? Okay. Where's our pressure? Is the market attempting to sell off and failing? Or is the market attempting to rally and failing? Where are our wicks? Failing to go higher. Right? What happened in here? Where are our wicks? Right? What happened in here? Where are our wicks? Where are our wicks? It's trying to rally and it's failing. Look at these body closures. Right? Okay. Expectation of the next candle. Right? These are very hard to get a hold of because essentially you're buying with the expectation here. If you need a refresher, have a look at Friday's action. Right? Where you literally have to get long without any sort of sweep because you're trusting the area to take you back in. Very difficult day of trading. So we're not shorting here. You can scalp this short maybe if that's your system, right? You're looking for attempts to rally that are failing to get involved in. Very possibly that this just unloads from here down, but we're in our area of interest now. We'll play a few more candles and then we'll take a little bit of a narrative thought, and you guys can predict whether we go up or down based off what you're seeing on the chart. And then we'll call it quits. Okay. Tap back into that fractal. Cool. Right up. Right. Trading back into here. Didn't touch this area of interest. Right. People are vying in here for it, but we just put in a valid high on this. Whoop. Whoop. A little bit of Chop City. I'm sure Tom would have taken that long, likewise with Mikey. Ooh. Look at this area, hey? It's been just a treat for us all day long. Right? So failure at an area of interest. A lot of people will see this as the objective. Probably trades up above this. Ooh, do I get wrecked? Possibly. If we get below here. Wouldn't like to see that. Get going, get going, get going, get going. Uh-oh. Yes. Yes. Okay. Where are we going? Look at all this nonsense. Let's remove all of that now. We don't need to see our winners or anything like that. You guys thinking failure and going up? Or we thinking we take the lows? We long, we long, we long. We long. Okay. Okay. Very interesting. How will we determine that? How will we determine that? What's our prevalent piece of information when we're forming narrative? Can I phone a friend? Nice. Nice, nice, nice. So, in our narrative building exercises, which we're going to be expanding on, we look at objective to objective to objective to objective. So what you have is lower time frame objectives and higher time frame objectives. Your lower time frame objectives look like areas of liquidity, which we often have as our targets, right? For example, failure here takes us back down to an area of interest, which takes us higher. Failure here or strong movement takes us back, right? Et cetera, et cetera, et cetera, et cetera. Our higher time frames do the exact same thing. For example, failure to break below here on a higher time frame, if we look at this from like an hourly perspective over these 2 hours, you essentially will see dojis on the hourly or very small candles, right? As we vie to trade back up to an objective. Now, we had a major SNDR here, We had the fractal that actually broke below that we tapped into and failed. And now we're seeing this SNDR that was responsible for breaking this high fail. We tapped back into it. We got a bit of a reaction, but there was no juice left. Right? So we had this low put in this high on our intermediate time frame. We then put in this low, failed. Right? We traded back in, put in this low here, which again traded above and failed. So we're looking at narrative. Exactly. We have a higher time frame double top. We're seeing, some of you may know this as a wedge pattern, where you have a 3 push failure and then we run it. Right? So for that reason, bouncing off of this SNDR, we're trading lower. We liquidated this SNDR, which I wanted to see hold here for a longer bullish move. We might trade back in. We've mitigated ourselves on the way down here, which I don't like for the bearish side. I certainly wouldn't be shorting here for these lows. But if somebody asked me to open a position right now with a stop above here and a target here, I'd be looking for this low. Anybody have any questions or any concerns with that theory? We'll see if we get this to play out, and then we'll call it quits. 2 hours 45 minutes. Does it seem like 2 hours 45 minutes or? Okay. Back into structure. Lower to go up. Brain feeling mush. Good stuff. Long. No, flew by. All right. Let's see what we get. You guys ready to roll the dice? You feeling lucky, punk? You feeling lucky, punk? Well, let's go next candle. Okay. Whoop. And whoop. Nope. Yep. What'd the day end up like? My goodness. Eef, 1600. Do we get death? No. Lovely. Okay, my friends. Thank you very much for spending your Sunday with us. I love the engagement in the chatter. And I will hope to keep in touch with most of you. And good luck in your future endeavors and everything else. We'll chat with you guys very, very soon. You guys take care.